Okay, we're recording. You can go ahead and introduce yourself.
Great. Hello, everybody. I'm John Macias with Clearmark Title Company. It's a great pleasure to be here and talk to you today about foreclosures and what the market is and kind of how in our past real estate market, how it impacted our industry, and then also what some of the discussion is currently, and then also what some predictions are for the future for 2021, 2022. So super excited to be here and share with you some good insight that I've had. This particular market, I was very, very active in the last downfall from a lot of sides of the business, from the title insurance and escrow side to the lender side. I did a lot of collaboration with a lot of the big lenders that were having difficulties, pulling out of the recession, dealing with a lot of asset managers, handling a lot of REO and foreclosure type business, and setting up those policies and procedures. Did a lot of business with the government, set on a lot of different real estate panels and summits in DC to help figure out and navigate a path out of this. So very familiar with it. I understand it really well. And I think it's something that is important for us all to be aware of and to continue to keep monitoring as we continue through this real estate market. So we'll go ahead and start the presentation.
All right, can you see the presentation?
I can't see it yet.
Okay.
I still see myself. I don't see the presentation yet, so. Okay, there we go. We have the presentation up. You can go to the next slide, would be perfect. So the Great Recession, this is kind of where we'll start off. We'll start off with a little bit of history of what happened in the last real estate crisis that took place, and then kind of build up from there to where we are today. You can go on to the next slide. You can go switch to the next slide. Oh. Perfect. Okay. So one of the first contributing factors in the last Great Recession was the subprime lending. So loan quality deteriorated for 6 consecutive years before the housing crisis, and rising homes masked the issues of that. So, the last time, analysts were taking a look at what was happening in the real estate market, and what was going on was this consistent, crazy growth of rising home prices that took place for 6 years. And you had a lot of analysts saying, okay, this is not typically what happens in our real estate market. And the growth rate was so fast that there were a lot of analysts saying, hey, this is going to be inflated. This is creating a bubble in particular areas, and it could be really, really detrimental to the real estate market. But it just kind of went ignored. People were ignoring it. There was people were still coming off of the high from all of the tech and Silicon Valley startups that were happening. People were making a lot of money, and home prices were still going up. Second was predatory lending. So this was an interesting fact that consumers who already had mortgages and who had built up a lot of equity in their homes were more likely to be targeted in this particular time by predatory sublending home loans than first-time home buyers. So homeowners believing that they were taking advantage of all of the lower interest rates to extract home equity from their home, instead got exposed to these really complex and risky products that quickly became unaffordable when the economic conditions changed. Next slide. Another, as you'll see when it comes up, but another contributing factor was the relaxed lending standards that were encouraging speculation. So are you able to switch to the next slide? It's not up yet. Perfect. Cool. So the third contributing factor, investors burned through the dot-com bubble in the early 2000s and saw real estate as a strong portfolio replacement. So the asset bubble. So lenders were selling subprime as mortgage-backed securities and using the proceeds securities sales to lend even more money. And what happened then was the interest rates started to rise. So home values started to plummet. Some subprime lenders folded. Mortgage defaults became totally, I mean, they just blanketed the market and the housing economy crashed entirely. A lot of you were aware of it who were in the business in 2008, 2009, 2010. For those of you who are new to the industry, didn't experience this, but definitely have heard about this. And so those were a lot of the contributing factors that helped contribute to that massive real estate crash that took place. So those are things to continue to look at. And of course, the industry took time to learn from that. We got out of that, and now moving forward, go to the next slide. We fast forward to today to where we are. So today you have the housing market is highly supportive by our post-COVID economy recovery. So you have a hot sellers market right now. Annual price growth reaching record highs. Inventory continue to fall. And then for the first time ever, the national median sales price has surpassed $300,000 level. So that's huge. New home sales have risen strongly during the pandemic. And then existing home sales are at a one-year high. So what we're seeing in this market are some of the same kind of initial, I guess, alerts that happened in the last housing crisis. Let's go to the next slide. So the U.S. housing market is far from crashing what a lot of people are predicting and what they're saying. But they're saying crashing in 2000 for continuing out for 2020 and 2021. So for 2020, according to NAR, recent forecasts for all of 2020 existing home sales are expected to increase by 1.1% compared to 2019, with the sales ramping up to 5.4 million by the fourth quarter. So that's a strong market, solid market we're seeing. NAR chief economist Lawrence Yun projects that a true V-shaped sales recovery as home buyers continue their strong return to the housing market. For 2021, existing home sales to reach $5.86 million, supported by an economy that is expected to expand by 4%, and a low interest rate environment with a 30-year mortgage rate at an average of 3.2%. So that's what they're predicting right now. So if you notice the trend of what's happening, so you have this low amount of homes, which is creating a little bit of an inflated price because of the amount of inventory that's out there. You have this very low interest rate that's out there. So it's creating a very nice, strong market, a strong real estate market right now. But what could happen is so we have some areas of concern. So let's go to the next slide. So areas of concern to look out for us and for us to kind of keep our eye on are high unemployment rate projections connected to the coronavirus pandemic. That means the number of predictions of properties. So next spring, we'll land between an initial foreclosure notice phase and final resale by lenders. So that have taken over some of these properties. So these are things for us to kind of take a look at. So what happens if the unemployment rate continues to increase and people are not able to come out of their, to acquire their jobs back that have had any type of forbearance, I mean, not forbearance, but furlough, or saying that, that find another type of job to take over, we can have a continued growth in the unemployment rate. So the foreclosures right now that are protected by federally insured home loans expired on the 31st. And so you're going to start to see anybody who has been behind and also using the forbearance could start to receive notices coming up towards the end of the year or even in January. Let's go to the next slide. Other things for us to watch out for. So the labor market, government aid and the moratorium on most residential foreclosures, government subsides for homeowners who have fallen behind on their mortgages, as well as the pandemic-related unemployment assistance relief. As you can see, the assisted relief that was supposed to be coming out has been delayed now already for, I think we're going into about a month now, or a little bit over a month. So if there is no relief or unemployment assistance, that could be detrimental to people who are relying on that to either to keep up with their rent and lease payments, or onto their mortgage for those who own homes. Let's go to the next slide. So in summary for Los Angeles of where we are right now, so the expected market time is at a record all-time low. So the lowest since, not all-time low, but the lowest since 2012 in October. So current active listings are up 1% in the last 2 weeks to 10,540 active listings in Los Angeles County. We don't see any suppression in Los Angeles County inventory due to COVID-19. In September, there were 10% more homes that came on the market compared to September of 2019. So 10% increase were on the market. The demand has also increased 1% in the last month from the month prior. Next slide. And then in Los Angeles, so Los Angeles distressed market, you see a total of 57 total distressed homes that are on the active market. Oops. We lost the presentation. There we go. Oh. Yes. So total of 57 distressed homes are on the active market, 38 foreclosures, 19 short sales. So it's a very low amount of properties that are out there, but we do have a moratorium. So lenders are not foreclosing. There's been some forbearance on some of the mortgages that people are not paying. So I think that we're just seeing a push out of a potential distressed market that will happen at some point, maybe in the first quarter of next year, if at all. But that's a possibility, something for us to look at. Let's go to the next slide. So 98.8% sales to list price ratio for all of Los Angeles County. 0.4% of all closed sales were foreclosures. So it's like, again, very, very small portion of the transactions and activity happening in Los Angeles County were foreclosures. And 0.3% of all the closes were short sales. So you can combine those two. You have 0.7% in any type of distressed type of transactions that closed in LA County. And then 98.8% of all closed sales were traditional sellers. So that's all good, solid, positive information that's going on in our real estate industry in LA County. Let's go to the next slide. So if we take a look at the Orange County summary, so we have a low supply and extremely high demand, a lot higher than it seems to be with the activity for a home, people wanting to buy in the market in Orange County. There's a lot less inventory. So current activity listing down 1% in the last 2 weeks to 4,100. So that's obviously Orange County is a smaller county than LA County, but still it's a small amount of homes out in the current active listing inventory. We did see the inventory suppression in Orange County between March and June due to COVID-19, but then in August there were 14% more homes that came on the market compared to 2019. The demand also increased by 1%, and then in September we were at 21% more homes that came on the market compared to 2019. So that's a massive increase that we're seeing. And then overall, there were 59% more homes on the market than last year. So you're seeing a lot of people putting homes on the market, getting ready to sell, but the demand is still quite large out there for people wanting to buy homes in Orange County. Let's go on to the next slide. So Orange County distress market, total of 16 distressed homes on the active market. So only 8 foreclosures are being shared out there, are being tracked, and 8 short sales. That's what's on the Orange County active MLS data that's being shown right there, and that's as of last month. And so let's go to the next slide. So the overview on here is 98.8 sales list price ratio for all of Orange County, 0.2% on the foreclosures. Same goes, so you have a total of 0.4% on the total distressed transactions that closed recently. And then 99.6% of all closed sales were traditional sellers. So you have a very strong, solid market in Orange County right now. Just you have a very high demand, people looking to acquire homes. Let's go to the next slide. Okay, we're there at the end there. This is our contact information. But so let's go in and talk a little bit more about what we're seeing and what things you as agents should be looking at. So you saw some of the indicators that were taking place from the last housing crash that took place. So you had a really high demand, price values had gone up extremely in an extreme amount, a lot faster than people were anticipating, and everybody was kind of going with it. The interest rates were low at that time. We don't see any indication that the interest rates are going to go up for the fourth quarter and also in 2021. We can, from what everything that we've been seeing out there, is that it'll continue to stay low. It may continue to, a slight increase, but what could happen in 2022 is we could see an increase in that and the interest rates, and that could create, a bit of foreclosure. So the affordability rates that people are coming into could be different, and of course, along with what's happening in the unemployment. So there was a lot of things for us to be able to look at. We studied the data every month. We put together a lot of the information. So if there's ever any information that you guys are looking for, wanting to know in a specific area, specific community, what's happening in that particular market. And again, I think it'll be an interesting time to take a look in first quarter of 2021 to see what the activity is for any type of default filings that are being posted in particular areas that banks will start to, again, with those foreclosure proceedings, and to keep an eye out for that. Are there an opportunity for any type of questions or anything, Patricia? I don't know if anybody would be in the chat box or anything like that.
Yeah, we're recording this, and then we'll be broadcasting it onto Facebook. We couldn't connect. There are, let me see if there's any in the box. There's nothing in the chat box right now, no questions.
So
do you have an audience there in the bullpen?
No one here. Everyone's out working away, it looks like. Yeah. So some of the things I think that would be great, too, for us to help you with that, information, things to be aware of if you're in a default transaction scenario. That one, you're going to want to go ahead and order your prelim to see exactly what's on that particular property. Take a look at it, what liens are against it, where the default is taking place, or are there any other types of liens against that property that would be an issue. And what would happen typically, for those of you who are not familiar with foreclosure proceedings, is that you would go through, and we would, for the lender that's going through a foreclosure, we would handle what they call as a TSG, which is a trustee sales guarantee, and we would help them with that foreclosure proceeding to follow all of the criteria by law that you need to do, from the notices and the mail outs and the right documentation around that. And then once it's foreclosed, typically what will happen is that that part's insured. We've insured that it's gone back to the lender of record and that they own the home. And so now that property becomes an institutional seller. And from there, it'll go to their asset management company, who will be in charge of looking for realtors in a particular area close in proximity to that particular home. And so there, is another opportunity for those of you who aren't familiar or weren't around in the last REO market, is that you want to start to take a look at, if there's foreclosures happening in this particular area, and then also who those lenders are. And so sometimes maybe if you have a farm or if you have a particular area, we can give you data that will tell you what lenders are lending in those areas, and then you can kind of get familiar and start making your relationships with those particular lenders. And if at any time, if there happens to be foreclosures there, you might have an in to be able to get on the list and get approved to become an REO listing agent for them. And there's a lot of different lenders and asset management companies out there. We're going to continue this particular subject forum over, throughout the next year. So we'll have a lot of data. We'll have contacts for you to go to. Those of you who are interested in that REO market, looking to get approved with different asset management companies, or knowing where to go, or wanting to become part of any type of default or distressed groups, please reach out. Our contact information was up there. We'll also send it out again, because there's a lot of different places. Just we have to get a little idea of where you're looking at, what particular area, and then how you want to get involved and start to learn. But I think it's a great thing to understand. And if any of your clients are going through a difficult time where maybe they need to get rid of their property, maybe they're trending towards a potential foreclosure, just can't afford their home, they can go to you. You can give them some different opportunities, what to do. Or if they're already in a scenario where they can go into a short sale instead of having it foreclosed on, you're going to be able to help them with that. And we can help you, of course, with all of the title side that you may need, or title and escrow if it needs to be done together. But yeah, there's a lot of documentation around that. We can help you read through the information as it pertains to REO or foreclosure or in default, and what the parameters are. We have a lot of the guidelines. We'll keep up to date if there's any changes or any time frame that will have to expand. So any of that information that you're looking for, please don't hesitate to reach out. We have a lot of data. We'll continue to keep following this information and keep following this market. I know that some of the old REO brokers that continue to keep doing REO, they're still really busy. They're receiving, a few assets per week on listings on REOs right now, which I thought was really interesting. So I reached out before this presentation, talk with them to kind of see what the activity was, and they're still very busy. There's some of the agents, brokers who are HUD approved, and they're receiving HUD properties. Some that are just receiving from independent companies that lenders or asset management companies that are still processing transactions. And actually, there's still a lot of old portfolio that is still barely hitting the market, that lenders had to go through a lot of different legal action to finally get that property in a maybe there was a dispute between the person they foreclosed on and the lender that took over the portfolio. There was a lot of acquisition of portfolio, so a lot of that stuff is coming onto the market now, and that's why you still see some REO business being pushed out there. I think I saw a question on the chat box.
Oh, I was telling people that there's some participants here in the class. I was saying if they want to go ahead and ask questions, I can start running through the slides as you answer the question.
Perfect.
We review them. So you guys can unmute yourselves if you have questions, or you can type it into the chat box.
Perfect.
Let me share the presentation again.
I have a question.
Yes.
Hi, so I wanted to ask, are there any courses that we can take to specialize or get certified in these kind of cases?
Yes, there are. Uh, there are some courses that, of course, MLS will have or online courses, but there's also organizations that specialize in REO and default that continue. They have meetings monthly. They have annual events as well. So yeah, there are quite a few. If you put your information in, I can send you a list of some different organizations to look at, and that you can, they have a lot of classes, they have a lot of certification type stuff that you can go through and become more familiar with the REO market. And they're also gathering a lot of data that they can be able to give to you as well.
Thank you.
Perfect.
Thanks, Priya. Anybody else? If anyone sees any questions on Facebook, you can post, mail them here. Sorry for all the technical difficulty, John.
No, it's no problem.
Couldn't connect, but we're going to broadcast this to Facebook right after.
Okay, perfect. Yeah, and again, and as questions come in, as it goes on, or anybody else is viewing it, we'll just send them my way, and we'll get right back to them.
Yeah, and Angie Weir, she chatted that she's also interested in those organizations.
Perfect.
So I will gather those emails for you and make sure that they get to you.
Perfect, thank you. Yes, and I'll send the organizations over their website, how to get signed up and learn a little bit more about them. And then at each of those organizations, I know a lot of the people who are in the administrative side and some of the leadership there that I can do some introductions to let them know you're interested in it and you're looking to learn a little bit more about the REO market.
That's awesome.
Yeah.
Anybody else want to drop their email in the chat or any more questions? All right.
All right.
You already wrapped up, John? Is there any?
Yeah, I think we're good. Yeah, I just, thank you guys for your time, and we're here to help you with any of your real estate needs on the title insurance side. Data, if you're looking for your farming data, just looking to do a little bit more research for a potential new listing, or if you have a transaction that's getting ready to go into escrow, anything that you need as it pertains to that property that we can help investigate for you on, please do not hesitate to reach out. You have our contact information that was at the end of this presentation, my info. You have also our technology specialist, our customer service manager, Vin Van, who is just has an enormous background on the real estate and also this REO market. He did a lot of business and is very familiar with on the REO side as well. Can help explain a lot of the information, kind of tell you what you should be looking for, or how to move forward on these types of things. Also very familiar with a lot of our property title toolbox, as well as any of the other programs that you might be interested or at least wanting to pull data from. So he's a wealth of information. And then, of course, any of our local sales representatives. We have Dana Delmer out in the Long Beach area, as well as Lori Ramsey out in the Valley, in the Calabasas area. So anytime, please reach out to us. We're here for you. We're your partners. Think of us as your partners and a good, reliable resource to bounce any ideas and help you get to across the finish line to get your next transaction, your deal into escrow. So again, thank you very much for your time.
All right, thank you, John. I'll post your contact information in the comment box in Facebook Live also.
Perfect. Thank you so much.
Thank you.
All right, take care.